You want to know what's going to happen with the stock market in 2024 over the next 5 months? Could the stock market from 2023 hold the key to understanding what's going to happen at the end of 2024? I have no freaking idea, but I love talking to Dan Bird. He's going to show us some charts, and maybe, just maybe, 2023 is the key to understanding 2024. Dan, what say you?
Don't you remember 2023?
I do. I remember.
It's only a year ago.
Wasn't that long ago?
Yeah, this is very interesting. This is I was thinking about this the other day, how it's kind of similar. So I thought I'd just put two charts together and
When in doubt,
take a
when
look.
in doubt, Dan Bird creates a chart. When in doubt.
Yeah, exactly. If I can create a chart, I will create.
There's no question. The chart's coming.
Exactly. And if anybody's interested, breakpointtrading.net is my website, and the free newsletter is right here in this little box, if you'd like to get that. Also, if you want to see what earnings are coming up, you can just click on this and
look at you.
Kind of filter for whatever you want, S&P or NASDAQ or big cap, whatever. Just see what earnings are coming up, because we're right in the middle of earnings season right now.
Yeah, next week is the week with the most S&P 500 companies reporting next week.
Really?
Yeah, 108 of them, I think, report next week, something like that.
Well, let's take a look.
There you go.
S&P 500 or 100?
Oh, 500.
500. All right. There they are. These are the ones upcoming earnings. These are sorted by date. There's McDonald's coming up. Yep, there's a bunch of them. Pulte, I think a bunch of home builders are coming up too next week.
Yeah, next week's a big week. What's going on with the consumer? You got some cruise lines reporting.
Yep,
you've got home builders.
You can look at the NASDAQ 100. So there's PayPal, AMD next week, Microsoft,
Starbucks.
Yeah. Lots of big ones. Marriott, T-Mobile.
It's a big one. Next week's big.
Yeah, Meta.
Apple reports next week.
Right. Apple next week. Moderna. So yeah, Booking. Yeah, lots of them. Amazon. So lots of them coming up next week. Absolutely. So let's take a look at some things. I talked about the small caps in the last session. Forgot to show this chart, but this is from Stock Traders Almanac. This is 2024 year to date for small caps. This is the Russell 2000, and look what happened right here in July. Right after July 11th was the CPI report. Right after that CPI report. Parabolic move in small caps. Very interesting. So let's take a look at, this is the election year, S&P 500. I talked about the potential head and shoulders, so this is a different view of it. 2024 has outperformed all the other election years going back 75 years. So we are due for a reversion to the mean. So even if we can't, so there's the head again, there's the neckline. So the target would be down here somewhere. If we then, here's the other left shoulder that I talked about in the last video. If we do that again, then the target will actually be below the election year, which essentially is a reversion to the mean.
Got it.
So I don't think we'll go that low, but I think we might fill out this head and shoulders, right? Which will take us down around here, close to this line. So this comes from Tom Bowley. This was in his webinar. Interestingly, he calculates S&P 500 history from October 27th until January 18th. It's up 21%.
Okay.
All right. So this goes all the way back to 1950. So 75 years. The worst time of the year is July 17th. And what's the date? What was the date? Friday? July 26th?
Something like that, yep.
So July 17th until September 26th is the worst time of the year, going back 50 years.
Okay.
All right. Best period is from the same period until November. It's just this couple of week period. So the end of October until middle of November is the best week, up 70% that week. The last week of October, or October itself, out of the last 14 bear markets ended in October.
Got it.
All right. So that's the best time, and kind of makes sense because mutual funds have to report their end of year by the end of October, not the end of December.
Got it.
So that's why it goes down just before then, and right near the end, it starts to go back up. Worst period is from the close 10/21 until 10/27. So while the best period starts on 10/27, the worst period is the week before 10/27, down 42%.
Wow.
So everybody during this period, and even last year, that was true. And I'll show you that in a second when I show you the two charts side by side. But everybody thought that that was it, that the market was crashing. And that last week, just before the 27th was the worst day of the year last year.
Oh, wow.
10/28, everything after 10/27 started a bear or bull rally that just didn't quit. All right.
Okay.
That was the absolute worst day. And I said that on this channel last year.
Love that.
And in fact, the Sunday before 10/27, I said 10/27 is going to be the worst day of the year, and that's going to start the rally. So get ready.
Like it.
Everybody else was saying, that's it. Market's never coming back. All right. So we talked about up 2%. On the last video, you mentioned that
the drop, 2% drop.
The market had not had a 2% drop in a while.
Yep.
So this shows you all of the periods that the market went without a 2% drop.
Okay.
All right.
Yeah.
Tom Bowley kind of alluded to this, although he didn't have the data. What he said was, this is the longest period in history that the market has ever gone without a 2% drop. And this chart basically proves that wrong.
Yeah, it's not true. Yeah.
It's not true, but it is one of the biggest ones.
Yeah,
one of the longest.
It's meaningful, but it's
absolutely meaningful. I mean, you can see it on this. 300, and I put the red and greens down here, as you probably can guess. Yep. Those are secular bull and bear markets.
Yep.
So this is the biggest one right here from 2003, which is during a secular bear market. That long period from the 2001 crash till the 2008 crash, until we recovered officially in 2013.
Yep. This
was the biggest period without a 2% drop.
In the middle, 3 years. Yeah.
Yes, 2003 to 2007. It's almost 4 years. That's in the middle of a secular bear market. So you can still make money during secular bear. Secular bear just means for a 12-year period, the market ended at the same place that it started.
Right.
It didn't make any headway over the length of that 12 years.
Right.
But it certainly did in the middle of it. So that's a cyclical bull market in the middle of a secular.
One hell of a bull market.
One hell of a bull market is the biggest one ever. And you can see all the other ones back here. You know, this one here is 75 to 79. This is 82. This is when Reagan was first elected. It started this long secular bull right here.
Yeah.
And going all the way back to 1950, you can see all the times. So
cool.
This one was meaningful, and it was bigger than the last one, which was 2017 to 2018, but by no means the biggest one.
No.
All right, so let's look at 2023 compared to 2024. So you kind of have to see if I can do this. If I put a box around where we are right now.
Yeah, I think that'd be good.
Which is about right there.
Yeah, that's the future we're proposing.
Yes.
Okay. That makes more sense.
All right.
Do they look similar?
Yes. Yes. So this is where we are. So there's that red arrow right there. So we're a little past the red arrow. We're actually right in this circle right here. That's roughly where we are right now. All right, so let's just look at the two of these. We've got a bearish divergence. So the market went higher while the momentum went lower. Okay. Yep. This year, the market went higher. The momentum went a little bit lower, not as much as back here, not as steeply, but it did go a little bit lower, even as the market made new highs. So we do have a bearish divergence this year. All right.
Okay.
You can see where the momentum crossed right here, right near the top of this range. The momentum on this one went down and then went up again and crossed again right near the top of this range.
Interesting.
Okay.
Mm-hmm.
And then it started to go down and made a little bit of a recovery, but not as high. So there's the lower high. And now we're going down and we're making a lower low. We just started up. So this is Friday, this blue bar right here. I mean, this is last year's Friday. This is Friday of this week.
Got it.
So
That makes sense.
the market was red, it went down. Market was red, it went down this year. Friday, it went up slightly. Back here, it went up slightly.
Okay.
Okay. So far,
Yeah,
that
I would argue that that's pretty similar.
pretty similar. And you can even look at the long-term momentum chart down here, which I drew an arrow right here. This is August 4th, where the 5 moving average crosses the 21. That's my short-term signal. So that's the short-term down signal when the 5 crosses the 21. And if we look over here where the 5 crosses the 21 this year, so I drew an arrow when that happened in both years.
Okay.
And you can see the long-term momentum indicator here had already gone below, rolled over. Down here, it wasn't quite, but it was getting ready to roll over as well. All right, so everything looks pretty similar to 2023, wouldn't you say?
All right. I would agree with you.
So let's take this away. Let's just move it to the side. Then we had a big rally. All right,
Okay.
so there's the rally last year.
There's Jerome Powell hinting rate cuts are coming.
Yes. So also look at the dates. So we're about 2.5 weeks earlier this year than we were in 23.
Yeah, we're 3 weeks probably. Yeah.
Right.
Okay.
This is another thing that Tom Bowley said. He said, we're kind of similar to 23, but not really. But he was using absolute dates. And I wish I had said, Tom, we are 2.5 weeks earlier than 23.
Right.
So what happened in 23, we're doing 2.5 weeks before that date.
Okay.
All right. So
yep.
Right now we're right here, right in this circle. The market rallied for about 2 weeks. And I think we're going to probably get a rally. That'll be, Wednesday when Powell hints that rate cuts are coming. We're going to get the rally in August for about 2 weeks.
Okay.
And then we follow 23.
Yeah, not so good.
So here's a lower high, lower low, lower low. Then we went down and made another lower low. So this is a kind of this over here on the left is a premonition.
Right.
What may happen here in the next couple of months.
Yeah, we have a couple of catalysts, we got
we do have some catalysts. We do have some catalysts, which is why I think that 2.5 week early is important.
I agree, yeah.
Because if I keep this going, actually, I'll just take it off right to the end. All right. So then we rallied again here in, first part of October. This is that 2 week period, which was the worst of the year last year, where everyone was saying the market was going down. This right here is October 27th, that little blue one, and the market rallied from there all the way to where we are now, to all-time highs. But this is that period. This is the period from basically the end of July until the end of October.
Yeah. Well, let me ask you something about the stock market, because one of the things I'm sharing with my audience about real estate is I suspect home buyers in general, right, in mass, are going to decline to participate. Right. We got the election. We got, we had those crazy events of the last 2 weeks. It's like too hard. They think rates are going to fall. So why buy now? So there's going to be a lot of people sitting on their hands doing nothing. I'm not sure how that plays in the stock market. Do people hey, it's too crazy?
You think waiting for the election?
I think there's a lot of people. I think the consumer is remarkably predictable in mass. Scared, nervous, pissed off. They're not likely to buy a home.
I think that's probably true for buying a home. I don't think it's true for the stock market.
Yeah, I was just curious.
And I'll show you why in a minute. But the stock market goes by earnings. So earnings is the key.
Okay. That makes sense.
If if you think they're going to cut. So this one here, the downtrend went down to October, then we had a rally for 2 weeks. So if we're 2 weeks early, that puts this downtrend, the end of this downtrend, and the start of the rally. Guess where it puts it?
No idea.
Right now, this little rally right here started right in the beginning of October.
Oh, so then we're 3 weeks before that.
So about two
September.
and a half weeks before that puts us September 18th. September 18th. And you know what date that is?
Is that Fed Day?
That's Fed Day.
Of course it is.
September 18th. Isn't it amazing how the market is so symmetrical?
Yeah. Every time you bring these out, that just slaps me. Yeah, that's pretty wild.
So September 18th is when the rally will begin. And then we're going to have
rate cuts will be delivered.
Yep, that's the catalyst. Rate cuts will be delivered.
And the market will realize you only cut when a recession's coming, and it'll roll over.
Right. Then it will roll over. So 2 weeks before this, it might start its rally before the end of October, but this downtrend might last a little longer because, like I said about mutual funds, the mutual funds are going to be rebalancing that last week.
Yeah, that always happens, right? That
last couple of weeks of October, that's going to happen no matter what else happens.
Right.
But then we're going to get the rally, and usually the market rallies before the election, and it rallies right into the end of the year. I think it's going to again. So we're going to rally off of that October low right into the end of the year. If you look at the recession watch stuff that I did in the last video, that puts the recession sometime in probably early Q2, and the market will anticipate ahead of time. So I think the market will rally into the first couple of weeks in January. And then we get another 2022.
Oh, interesting.
Bear market for almost the whole year.
Ooh, scary.
All right. So that's my thesis using data.
Yeah.
Does not mean that will happen.
No, by no stretch. This is just one man's guess.
That's right. I'm just showing you the data and making a comparison between the 2 years, which is really interesting.
Yeah, you've got receipts going back at least 3 or 4 months. You really don't think 2025 is going to be all that good?
I think 2025 is going to be another cyclical bear market.
Yes, not good. Okay.
So yeah, I think it's going to go down probably most of the year.
Okay.
It's not going to end the secular bull market though.
Right. Yeah. Right.
Secular bull market will still continue.
Okay.
I did have I don't know where I put it. I keep losing this chart about 1968.
Oh, LBJ.
Yeah, LBJ. I don't know where it is.
That's okay. That's all right.
Yeah, but it's pretty interesting. 68, the market actually, LBJ resigned. Democratic Party was in turmoil. MLK was assassinated he resigned the end of March. MLK assassinated in April. 2 weeks later, the market went up. RFK, who was a candidate running for president, just like Trump is, was assassinated. Wasn't a failed assassination. It was a successful assassination. The market went up. The market went up until just the end of the year, right after the election. And from that point on, the first part of January, about the second week of January, started the secular bear market of 69 to 81. The 12-year period from 69 to 81 started right after that election.
Wow.
So it'll be interesting to see what happens this time.
Yeah. Well, do me a favor, show your website one more time. And folks, what do you think? Is 2024 going to end like 2023? What did you think of the data? Do you think there's any gems in his thoughts? Let us know in the comments below.
Yeah, and if it does pan out like that, what that means is we'll have a rally in August. You'll have a chance to either get out or set stops higher, whatever.
Yep.
Then the next leg down will be lower than the previous one till October, and then we'll rally into the end of the year. So you can use that for risk management. That's the whole point of technical analysis,
Absolutely.
is managing your risk. So just keep that in mind.
Love it.
So
Dan, you're amazing.
breakpointtrading.net is the website, and the newsletter is right here. It's got tons of stuff in there.
And I'm going to put you on the spot. I don't know what you're doing midweek, but Wednesday is Fed Day.
Oh,
Could we
yeah.
maybe get a midweek update Wednesday after the close?
Yeah, I think so.
Nice.
I don't know what I'm doing Wednesday, but I'll try to do that after the market closes.
There you go. Dan, you're amazing, buddy. Take care.
All right. Have a good weekend.
You too.